Is it a sign of people's growing ambition with the increase in purchasing power, or is it a distress signal? Either way, entry-level cars are finding few takers, while utility vehicles are flying off the shelf. The retail sales of passenger vehicles grew by 4% year-on-year in May, but at the same time, the wholesale dealers are also seeing stocks grow heavy. Car dealers across the country reported an inventory pileup of passenger vehicles in May this year. According to the Federation of Automobile Dealers Association, or FADA, the average passenger vehicle inventory was in the range of 40 to 45 days. Compared to January 2023, when the range was 33 to 35 days, the inventory days have increased by 10 full days. Increase in inventory after a certain period is a worrying trend. Rising inventories can clog the supply chain and the dealer's ability to absorb more. So, what does this pile up in inventory tell us about the car market?
There are three very distinct characteristics that are different from over a year ago. The monthly sale numbers have actually increased by 30%. And there are more numbers of cars that are hitting the market every month. Given the logistics and the vehicle carriers, there's a change in legislation about vehicle carriers. No new vehicle carriers can be registered. So you have them also moving by rail. So the logistics challenge. And the third is that the chip sets that are coming in, the company has to make a product depending on the chipset that they get. And therefore, you are saying different models piling up in differently.
The available statistics on an overall level is that the inventory level at the dealership in the industry would be roughly around 262,000 units. That's roughly 26-27 days of stock going by the current retail levels. On the other hand, there are some models where the production is adequate and in fact more than the demand. There, the inventory level would have gone up past the 40-45 day mark.
Automobile wholesale growth in FY23 was at 26.7%. The retail growth, on the other hand, was low at 23%. The retail sales growth of passenger vehicles was 11% year-on-year in February. In March, it was 14%. It dropped to 1% in April and recouped to 4.31% year-on-year in May. The overall retail sales growth in the automotive industry was more than 10% year-on-year in May. This was driven by growth in sales of three-wheelers, which was a whopping 78.6%. According to Reuters, SUV sales in FY23 comprised more than 50% of all passenger vehicle sales. This comes at a time when overall passenger car sales were highest at 4 million units in FY23. One of the key things that hampered automotive production during the pandemic lockdown was extreme shortage of semiconductor chips. Maruti Suzuki had earlier said that uncertainties in the electronic component supplies might affect production in FY24, but the supply is easing now. On the other hand, the share of entry-level cars in FY23 PV sales fell to an abysmal 1%. Sales of small entry-level cars had peaked in 2016 to 17 when the total sales were more than 500,000 units. In FY23, it was down to mere 2.5 lakhs. Experts say this is an indication of the K-shaped recovery in India. Another indication is the fall in sales of growth of mopeds and bikes up to 100cc. Moped sales fell by 51% in second quarter of FY23 and bike sales fell by 35% in the same quarter. So, are PV sales growth led by SUVs sustainable? For how long can the premium segment carry automobile growth?
First is that during pandemic, obviously the white collar jobs were not impacted much because they were able to work from home, right, relative to blue collar jobs. But then, other big reason is the affordability have got impacted, because if you see last 4-5 years or 3 years, Indian government has been obsessed about the regulations. The kind of regulations which have come is like being a direct hit on the entry cars, because it doesn't make any sense now to buy, pretty entry level cars, because the price gap between an entry level, a mini car and an entry level subcompact car is not much. And this is also now forcing OEMs, to actually start from subcompact segment and, limit their options or investments on entry cars. And other side is, I think the consumer is also changing, so they are also now aspirational.
Amidst growing inventory days, retail car dealers said that original equipment manufacturers should recalibrate their production lines to produce cars with less inventory days. But is that feasible?
Very much feasible that we would like to obviously produce more of the vehicles which have a long waiting period. It all depends on the availability of semiconductor components in those models. For example, in case of there is obviously the limitation in terms of assembly capacity, which is dependent on the lines at which they are produced and the factories and the plants where they are produced. For Maruti Suzuki, we have at the moment 370,000 pending bookings, large waiting periods for Ertiga, for XL6, for Brezza, for Vitara, for Fronx, and so on. And then, of course, for models where we have been able to produce much more vehicles, there is very little waiting period.
Experts say that entry-level cars have become expensive due to government regulations, and the price gap with subcompact cars has narrowed. The OEMs too are focusing on the new mid-premium segment.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's making plans for an early retirement. Business Standard.